It's good, ladies and gentlemen. What another fine day we have. Bitcoin on edge a little bit. Tensions overseas are still mounting, and everyone's like, what's the Fed going to do next? That's where we are right now in the marketplace, ladies and gentlemen. It's been a pleasure speaking to you all, and enjoy your day. If it was only that simple. Lots is happening. We just had the data come out regarding the unemployment claims. That bad boy came in a little bit higher than expected, 225K. So what does that tell you? Well, the bigger picture is like this. People want to know if the Fed's going to cut interest rates. Now, we've just had a complete switch from a specific bank, or should we say a world power, Japan. Now, this is huge because when the newly appointed prime minister came in, he has a history of being very hawkish, which means that they're going to want to increase interest rates in Japan. But his tone has changed, which only means one thing. It means that, in principle, the carry trade can actually continue. So we don't have to worry about the $4 trillion that could effectively be unwinded from the marketplace. That's good news, because you only go back to 5th of August, because when they increased the interest rates, 5th of August saw a big drop to the downside with assets across the board. So how does it help Bitcoin? Well, it does, because it means now investors can effectively take that money from borrow yen, convert it into dollars, and then use those dollars and put them to work. That's good news when you think about it. But we've got other things that could be compromising it. Middle Eastern tensions are starting to get pretty bad. And the only thing that we need to happen is we need to know if they are going to attack Iranian assets, which means the oil fields and what have you. And if they start going for that, you end up going to get this problem with global supplies being affected. That is naturally going to be sending oil's price aggressively to the upside. Gold will probably keep on going higher. But the question is, will investors seek risk appetite in Bitcoin? Now, in today's live stream, we've got a few stories that are saying that Bitcoin's going to go down, and we got some stories that say Bitcoin's going to go up. Which is it going to be, ladies and gents? Well, we just have to follow what the big money is doing, all right? You can write an article about any pattern that you want, and ultimately, it's what the big money is going to suggest, and that's what we're going to be diving into today. Now, looking across the board, we've seen that NASDAQ is currently trying to get that key 20,000 zone, but we have the biggest news announcements coming out tomorrow, which today could be a little bit of a tricky day in the marketplace. So if you're going to be trading today, I'd be very, very careful, because the markets have the tendency to go sideways just before the non-farm payrolls and create that consolidation where they're building positions in preparation for the non-farm payrolls. And this is what I always look for. If assets start to appreciate before non-farm payrolls, usual consensus says that we're going to end up seeing either data that's not going to be good, and then the markets will then come down. Sometimes when you see them going down, you end up assuming that by the time we get to non-farm payrolls, assets will then appreciate on any good news or bad news on regards to the non-farm payrolls. But what traders are looking for right now is any data or anything that would suggest that the Fed is going to aggressively cut interest rates, okay? Now, the key thing is if the news from Japan is going to entice traders to want to put risk on, that means they're going to borrow money from yen and convert it to dollars. Happy days. But the problem we've got is, are those investors and traders going to be using those dollars? Or are they going to be then sitting in cash because of the uncertainty that's unfolding regards to the interest rates? That's what we're going to try and find out today. So, if you are new to the live stream, mad love and respect. Let's get into what's going on, and let's try and make sense of the madness. By the way, before we get into it, I'm going to be talking about a giveaway. Yeah, nice little giveaway. 2 ETH giveaway. How about that? So we really want to see price pumping today to make that ETH worthwhile. Hopefully nothing bad happens in the marketplace. I may have spoken too soon, but nonetheless, let's get with the program, ladies and gentlemen, and get into the flavor. Welcome, welcome, welcome. Bank of England rate reduction is going to be 1%, bro. Oh, that's awesome. So listen, when you've got major banks cutting their interest rates, okay, that's good news. But at the same time, it means that there has to be a shift in liquidity, all right, because money's tied up elsewhere because of the back of investors waiting for interest rate cuts, okay? So it's really important that you understand there's going to be a transitionary period where there's going to be a shift in where money has been and where money is getting prepared to go. They can't do it overnight, guys. They can't move the market so aggressively, and they can't scare people, because if investors want to take money out of the bonds, well, they can do it if they want, but they don't want to frighten the market too much. So they do it in increments, and that's when you'll then see the bonds starting to go down, and then the yields start going up, and then assets in principle should be appreciating, because if they're taking money away from low risk environments, the logic says that they're going into high risk environments. But if you end up seeing bonds going down and the stock market going down and the dollar going up, it means that they're neither seeking low risk or high risk. They just want certainty. And that's where they'll be planting themselves in the dollar and relying on the purchasing power of the dollar. And that would increase. And then they would then put their money to work when they have a good understanding of what's going on around the world, okay, in terms of the marketplace, okay? So to get it started off, stocks are looking to fall at the open in principle. Oil is gaining, but that's only because of what's going on in regards to Israel itself. It's not looking good with Israel, ladies and gentlemen. It isn't. And as it says over here, if we see them actually attack in the actual assets for Iranian assets, that's going to be causing a big problem. We go into it all, and it says here that Brent crude oil rose for the fifth day, climbing towards $75 a barrel. And should Israel strike key Iranian assets, the Islamic Republic will lash out and escalate their conflict, dragging in more countries and potentially disrupting global shipments. You got to look at it like this, guys. If oil does decide to keep on climbing higher and higher, what impact does that have? It has a massive impact on inflation. Now, maybe not until the next inflation reading. So the second inflation reading, we will naturally know that hypothetically, if there is an attack on Iranian assets and they start hitting oil fields, then oil's price is naturally going to keep on going higher. And then, of course, manufacturers, companies are going to naturally increase the cost of their goods because it's costing them more money to get their supplies in. The consumer's going to have to absorb that. And then the readings of inflation are going to come in higher. The Fed is less likely to cut interest rates as aggressively as we want them to cut them. This is the problem we've got, okay? So this could be the one push that it's bad news if inflation goes up and if they do attack Iranian assets. Ideally, we don't want them to attack Iranian assets, but war is war, okay? When you try and make a point about something, you're just going to make a point. So it's going to be very interesting to see how it actually unfolds going into tonight. You can see bright as day that gold is actually making a very significant move. Where are we with gold? You can see gold is still holding out. It's still basing out inside of this range right here. It's trading towards its all-time highs. And the only issue that we've got is the dollar itself is still climbing up, but we've got movement in the sense where we've got this just a trend. And when the dollar starts to trend, that's a problem. Okay, that is a big problem for us when the dollar starts to trend. At the same token, the data that just came out, which is 225K on unemployment claims, which kind of contradicts the idea of jobs being available. And then you've got more ADP non-farm employment change. So that's a positive reading. But this has come in and it's suggesting that unemployment claims are higher, okay? Only fractionally, but they are higher. Now, the next bit of data that comes out at 3 p.m., which is in the next 45 minutes, that itself is going to reveal if the manufacturing sector is going to be contracting or not. Now, they're expecting a positive reading of 51.7. If this ISM reading comes in and shows a contraction, which means it's going down below 51.7, maybe even 50 or below, that would give the Fed the idea that the economy is starting to struggle quite badly. Then that's going to grant the idea that investors are going to want to have put bets on the idea that the Fed is going to increase the interest rates aggressively, because the word on the street is that they're looking at cutting it by 33 basis points, and that's come down from 44 basis points. So they had in their minds 50 basis points, but the bets are now coming in from the swap traders that they believe that the Fed will cut around 33 basis points. The data today on the unemployment market could give us a surprise reading tomorrow. Can you imagine if the unemployment rate comes in higher tomorrow? If the unemployment rate comes in higher than 4.2%, the Fed will have no choice but to cut interest rates as quick as they can, because then it will naturally allow them to let the economy avoid going into that funny word that begins with the letter R. And, you know, we can't really say it because there's not really been a classification for it. They've changed, they've changed the classification for recession. They really have, okay? You know, you need to see the economy contracting over, I think it's on 2-3 quarters. What's going on? But the problem is you're witnessing the stock market going up. The stock market going up is not the economy. Remember that, okay? And people seem to think that if the stock market's going up, then that means the economy is doing well. Well, no, it can't be that. The stock market is speculation, okay? And if people believe that things are fine, the stock market will represent that. But when the banks and all the analysts all come out saying that it's not looking good, look at the interest rates that we are at right now, the market thinks, who cares? Let's just move over to other assets and diversify ourselves. And then that just creates continuous liquidity coming into the market, which makes investors think, hold on a second, can we actually rely on the macros? It makes you think, can we? Oh, is the economy good or is it bad? They won't admit that it's bad. No. None of them will admit it's bad. But they won't say it's doing great. And then the election itself is going to be one of the key aspects to it all. Now, going back into it, the topic today, that this is big. This is huge. Yen extends fall on dimming hopes of an early Bank of Japan hike. This is massive. This guy right here originally had a negative mindset about interest rates. He wants to increase it because the yen is so devalued, okay? And he's coming into power with the idea that let's improve our yen. But if they improve it too much, it hurts them in terms of trade. Remember, they are the largest holder of US debt. It pays them to have a devalued currency when the majority of it is charged up into the dollar, okay? In the sense of the US bonds, all right? Now, Japan has been selling US bonds as well as China, and China's only selling US bonds because of the slowdown in the economy that they've got. And China is the second largest holder of US bonds, but you've got the UK creeping up ever so slowly behind China, all right? But with him being so, or should I say changing his tone, that kind of now gives us the heads up that if the yen's going to go down, the dollar's going to go up. Now, that will be for a period of time, okay? Because if the yen is starting to drop down and you can see it's going to start, it's recovered that vector candle completely. And you can tell that we are in very volatile times when a fluctuation of a currency is behaving like this. This is not good for a currency. It doesn't work. It needs to be something progressive. It needs to start going up and then it comes back down in a controlled fashion. But when you witness volatility coming into specific assets, like currencies themselves, not from a trading perspective, but a changes in value, it changes in perceived value, okay? So you got to look at it like this. Dollar dominance has been moving up towards 1.5%, okay? So that means that the purchasing power of the dollar is at 1.5. That means you can technically get yourself a little bit more Bitcoin, okay? Looking at Bitcoin's price, you can see it's actually starting to pull back down, and there is a possibility they could try and work their way a little bit lower, but we've got data coming out which could flip it on its head. Today's data that come out is a good reason for assets to appreciate because it's giving us scope that the unemployment claims market is looking like there's a problem. Less people in work. That means you control inflation. That means more interest rate cuts should be coming our way. But the ISM PMI is going to be coming into action, which could then paint a nicer picture of that. If not, the data that comes out tomorrow will give us the clearest picture because that's what the Fed had said. Unemployment market is going to give us the true indication as to whether or not we're going to see these interest rate hikes that we want to do. If we do want to cut them aggressively, this is the data that's going to lead us to it, okay? So just be very mindful when you are trading from now going into tomorrow, okay? You might see a little bit of movement today, but nonetheless, just be very careful because it can get a little bit tricky going into the non-farm payrolls, okay? So with that being said, with regards to this yen story, it means that if the yen is not going to be increasing the interest rates in the future, that means investors can now borrow yen and put that yen to work and convert it into dollars and then use those dollars to then buy stock, which makes it more interesting here because you've got some guy here who has said that his target, the year-end target, which is only a few months away, okay? 2 months. How long were you? What? 2 months? We're in October now. Okay? In 2 months' time, this guy believes that Rubner worries his year-end 6,000 S&P target is too low. So let's just put it into perspective now. If they believe that the rally is going to start and the S&P is going to go to 6,000 or more, surely that means Bitcoin's going to pump. Surely it means that the back of this story right here means that they're going to start putting money to work and the carry trade principle is going to be exercised. Okay? So then we then take that logic and go over to cryptocurrency. Okay? Lawmakers pushing for Bitcoin reserve plan. We spoke about it last night and it seems like they're really trying to get it pushed. Okay? So that'll be great. All right? Make use of the existing 200,000 Bitcoin that the US government holds. Why on earth are you holding Bitcoin, US government? I have no idea. Honestly, it's absolutely terrible. But we're starting to see a different tone with a few analysts across the board, and we're going to try and make sense of that bad boy. Check this out. Crypto analyst Mr. Cowan issues Ethereum warning, and he says that Ethereum could see a bearish Q4 if history repeats itself. Okay? So he goes into talk about how that if Ethereum goes green in September, the 2016 pattern is still tracking. If it continues to play out, it would mean that the Q4 is red and is followed by green in 2025, Q1. So I'm looking at this and I'm like, okay, it's... When I'm looking at people's analysis on cryptocurrency and I look at whether they're using other factors such as, crypto or blockchain data per se, right? I look at it and I say to myself, oh, come on, what else have you got? What else have you got? Okay. Now, Cowan does use the macros, okay? And he does make reference to it. And I know that he knows that, but I think he puts this into perspective to make it a little bit clearer for people. But comparing to where we were in 2016, in comparison to where we are right now, it's a different scenario, okay? Very different scenario with what we're dealing with right now. 2016, there was no existence of any ETF. There was no existence of Wall Street. There was nothing. It was all based on crypto. And then going back into the story from yesterday about the 4-year cycle, what's impacting the 4-year cycle is happening as we speak right now. We didn't have institutional ownership involved in it. We didn't have the prospect of them pricing in the future in cryptocurrency, because cryptocurrency is primarily all about, is that good news? Let me get involved. Is that bad news? I'm going to get out. Okay? We didn't have that problem before. Now, we had that mindset before. But that same mindset is happening right now in crypto, and it can't be. Because you've got hedge fund managers that can move a lot more weight in sense of money, weight, It can move a lot more Bitcoin or Ethereum because of their purchasing power, okay? And that can impact the markets. And they can price things in before the actual event, which is why the ETF itself and the actual impact of a halving event in Bitcoin has already been priced in, which is what's throwing people off about the 4-year cycle. People say it should usually take about 6 months. Ladies and gentlemen, it's October. Still ain't seen no big move in Bitcoin. You even go into articles like this from Mr. Brandit himself, Peter Brandit. Brandit's, I can't even say his name properly. He says the 3 blind mice trading pattern is coming into play. Okay, then. So 3 blind mice means that it's going down. Bitcoin's looking for some cheese. All right. So, okay, then. It says that it sees this, he sees it as a continuation pattern, meaning that whatever direction the 3 blind mice are headed is where the future price action will follow, which is then backed by this story here about a final dip is coming. How many of you believe that there is a final dip on its way? That's the question, okay? Now, if we just go over to the chart itself on Bitcoin and understand that logic, you can see that on the higher time frame, yeah, it looks like Bitcoin is due or primed for another dip. But I'm looking at these vector candles up here that they haven't yet recovered, but they have recovered, not fully, okay? So if you're a holder right now, guys, the best thing for you to do is to draw off these specific ranges that I'm going to mark off, okay? Now, the first range is this. This is the violet vector candle right here. Take the top of the candlestick, forget the wick. Take the close of and the open of the candlestick, go across the chart and do this, okay? That's your first block. The second block would be this red vector candle and then go into the close of the vector candle and mark that across as well. In a different color what you need to do is the same thing for this candlestick right here, okay? Go across, all right? Now, once you've gone across that point, because we are looking for higher prices, all right, the reason why I'm not using this red vector candle is because we're looking for higher prices on Bitcoin. Now, I'm going to change this, and I'm going to make it into a different color, okay? And I'm going to change that to, let's say, green, okay? Just so you guys can see it a little bit clearer. What are you looking for within these ranges, all right? The idea is this. If there are people interested in buying Bitcoin within this range, okay, this candlestick right here is going to repeat in the future. Why? Because it means that the guys who have been buying, which is when prices are going down, and we understand that to be the case with the bids and the offers in this chart right here, okay, you can just see it bright as day. There's lots of buying. Look, buying, buying, buying. This is all buying. Look, someone bought 1.39 million at 62,861. We go into it a little bit more and saw last night. They had bought 60,400. They had bought 13.81 million when the initial amount was 1.1 million. Okay. So with that logic, I can see in this area here on the 1 hour time frame that buying seems to have slowed down in this range. Okay. The liquidations for the longs have effectively slowed down a little bit. Doesn't mean that they won't continue to liquidate traders, but what I'm saying is we're starting to see a change in the way it could be behaving going into the future, all right? So with that being said, I go into the chart again and I say to myself, okay, these price points right here, how do I actually logically make decisions based on these actual points that I'm marking off in the chart, okay? So what you've got to do as a holder is you've got to wait to see if Bitcoin, okay, is going to actually come out of these ranges to trade to the upside, because that's what the logic of these violet and red vector candles implies. Look in the chart itself and you'll see what I'm talking about. You see violet vector candle, red and blue vectors coming into play, and then they recovered the vectors, up they go. Red vector candles, violet vectors, red vectors, they come back into those ranges, okay? We see the same thing here again. Red vector candle comes down, Bitcoin makes the move to the upside. So what's going on here is they're bringing price back down again to effectively get people to be committed to start buying Bitcoin. I'm talking about the smart players right here, all right? At the same token, when price stabilizes and we get ourselves some relatively decent news in the stock market and risk comes on, people then will naturally start coming back into Bitcoin to start buying it, which is what's going to be fueling the guys who were previously buying Bitcoin in this range right here to start selling, which in principle will lead Bitcoin to move up again. Now, with these specific price points right here, rather than the actual price point itself, focus on the way Bitcoin's behaving in and around these zones, okay? So looking at the chart, Bitcoin could potentially come back down a bit more. It could. But when you look at the 60,336 range, you know now that historically that is a point where participants had come in to offer Bitcoin. That meant that they were willing to sell it and people needed a reason to step in, may have been good news or whatever news it was, which would naturally lead to a pump to the upside, okay? You're trading a macro environment right now, ladies and gentlemen. It's important that you understand that, because we're not trading in the sense where it's in a trend, all right? Because you can have good news and bad news. If it's trending upwards, it will keep on moving upwards, all right? And we are using very small zones right now, okay? A holder's really got a whole range between 70,000, the all-time high of 73,000, and this low right here for the year, which sits at 49,000. That can be his accumulation range, okay? A 20,000, 23,000 range. And he's going to be working out, okay, buying and selling, or just buying inside of this range. And as long as it doesn't go below 49, then I'm happy days, okay? But for a holder in short-term plays, wait to see how Bitcoin behaves within these ranges. Now, the second part to it. You see these red and violet vector candles? The idea is that if price is going to break through these points, we want to see green vector candles. And if we do see them breaking up towards the first point right here at 63,281, we want to rely on the market's memory in the sense that they don't sell off from that point, which means that investors will want to start buying Bitcoin as it's dropping from that range. So hypothetically, you're looking for it like this. An ideal scenario will be this. Bitcoin moves up from this point. Happy days. You've just confirmed that the guys here are happy to sell their Bitcoin. Bitcoin moves up and retail comes in and starts buying, because you can't sell if no one buys, okay? If they start making their way up towards this point here at 63,400, it's at that point where you'll be looking at it and saying, okay, we've been going up for the past day or so. We've had a big God candle and everything's moved up. Happy days. Would this be an area that I'd want to be taking some profits from, right? And when you've got that in your mind, you're thinking, if the market is going to pull back from here, I would be naturally expecting more buyers to come in, which means they could send price back down again, retest the same zone that they originally had started to buy from or sell from, and then price would actually then come back up and break the next range where the market had previously wanted to sell off. In other words, buy at a discount, okay? And then effectively, they make their way up towards this point at 65,000. You're going to be on the assumption that there's no one wanting to bid. In other words, bring prices back down again. And then they break through that point. And then you've got vector candles in either of these ranges. And you repeat the same process over and over again. What you're doing with this strategy, ladies and gentlemen, is you're effectively relying on the market's memory of previous participants who had gone long or had sold. Okay? And you're relying on the market's memory. That's what, in my opinion, is what true support and resistance is all about. It's the market's memory. Do I want to buy from here again? Do I want to sell from here again? It's got nothing to do with supply and demand, because there is always a supply in the market. Because if you didn't, then nothing would move. It wouldn't move, and it would be such a horrible marketplace to trade, because you will be waiting to get filled. You'll be sat there like a wet lemon looking for an order, and you're going to be there saying, oh, there's no supply or there's no demand. That's what market makers, in principle, are there to facilitate. They are facilitate the demand of the market takers. Okay? Are we all on the same page with this? I went long, but I moved. Okay, cool. Are we all on the same mindset of this? Yeah? What time are we on? Market's open. Yeah, never mind. So, first things first, I do want to introduce the giveaway for you. Okay? Check this out. Here is the giveaway, courtesy of BTCC. All right. The instructions are in the Discord, but they're giving away 2 Ethereum. Okay. And the way it's working is 0.5 is guaranteed to TR Platinum members. Okay. So if you become a Platinum member, you effectively get the chance to win the 0.5 giveaway of Ethereum. Second, 1.5 Ethereum is going to be giving away to the Traders Reality community. Okay. And in order to participate in that, you've got to be part of you would have had to have joined the BTCC platform. And here are the instructions themselves right here. So 0.5 Ethereum guaranteed to TR Platinum members. To qualify, 0.5 ETH, you must be an active Platinum member on the website. So there's a 20% discount on that. Get involved. It's pinned to the top of the chat where you get trade setups and what have you, and lots of other information about the hybrid system that's going to help you understand the nature of the game. Okay. Then 1.5 giveaway for those who've signed up using the Traders Reality link on BTCC. So in the description, you've got that link right there, and it will take you to a page, something like this over here. And you'll see that. Great for anyone in the United States and what have you, because you don't need KYC or VPN, okay? Then with that being said, go back into that. And then 1.5 ETH will be split amongst 3 randomly selected eligible participants. And then it pretty much explains it right there. And we've got the dates as well that we're going to be giving the winners the Ethereum, which is on the 21st of October. So it's a little thank you from BTCC. Happy days. Get involved and good luck with that one. All right. Everything you need is in the Discord and in the description of the live stream if you want to participate in that and reread this. But I'll put this up there so you can actually look at it again. Okay. Cool. Any questions, ladies and gentlemen? NASDAQ. Oh, I took some trades this morning. I took a very small trade this morning on NASDAQ. It was, yeah, $1,545. Well, let's just bring this one up here. Okay. So yeah, $1,485. So we're slowly growing this balance. And that was my trade this morning on the NASDAQ. And I was effectively trading. Where is it? So on my account right here with Ninja Trader, I've got the lifetime plan where I've got access to the order flow plus and stuff. You have to pay $1,500 to actually get very, very cheap costs of trades, like really cheap. Okay, the free version is something like 99 cents and 1.4, $1.45. Now I'm literally paying tuppence when I'm opening and closing trades because of the frequency of trading that I do. Look at this nut job right here. Look at how fast it moves. I'm going to show you what I mean about it. Okay, I'm going to show you. I don't care if I make any money on this trade or not, but I just want to show you what I mean about NASDAQ, okay? So let me just bring it up for you to show you why I trade the NASDAQ and the beauty of it. So here we go. Let's go to the 1 minute time frame. NASDAQ, okay, we've got ourselves a little bit of a pump right now. Whether it works or not is going to be another story. I've got to be very careful because I've got green vector candles. They're coming down, and we got the move. Here we go. Just quickly take it. Here we go. Quick move is going to continue up. I've just taken one contract. Nice little pump up right there. Keep going, keep going, keep going, keep going, keep going. On the vector candle close. Pump. Up she goes. Keep going. Keep going. Yep, I'll take that. 25 ticks profit. So we just picked up a nice $170. Done. That's why I trade NASDAQ. That's why I trade NASDAQ. And it can keep on going as well. All right? Because of how fast it moves. You know? And that has cost me nothing. Nothing at all. Now, it's not for everyone. Not for everyone. Okay? But that's what I do. A quieter market would be Bitcoin in comparison. I generally see that Bitcoin will be way quieter than that. But look at how fast they were moving. Yeah? And that's what I look at. I'm going to try and do it again. We're going to see another move. Hold on. Going to come back down. Red vector candle. Let's try and do it again. Here we go. Push up. Might be a little bit off this one. Might be off on that one. Hold on. Push up again, NASDAQ. Push up. Push up. Go to the red vector candle to the left. Come on. Break the range. Break the range. Go for it. You're not done yet, NASDAQ. Push. Push, push, push. Do it again. Do it again. There she goes. There's the vector candle push. 19, 21, 20 ticks. Go. Get out. Okay. So that was another $150 right there. Do that all day. In, out, at speed, because that's what I need. I need that volatility. I need that speed. 21 ticks done. Now they're going to come back down into the vector candle, so I don't need to worry about trading that. They came back into the red vector candle recovery point. And that's what I do on repeat. You know? But depending on the times, because when I'm doing my lives, I can't take advantage of that. The start of the brinks. I know they're going to come back to these vector candles. They will. Because that's what the NASDAQ does. It front runs. And it starts to build, like it keeps on going. And it's like it wants to go up towards that point. Okay? Key number up there. Wait for it. I'm going to try and do it again. Hold on. Wait. Push. Push. Try and do it again. Be very careful. Could be careful with this one. Could be wrong on this one. Come back up. If you can get back up, that will work for me. No, get out. No, not interested in that. So we just lost. You know? That's the nature of the game. But it's this is how we work it. But you do that over a sample size of trades, you're laughing. You know? Bitcoin doesn't move like that. It does not move like that. Doesn't at all. And that's the funny thing. Look at that. It takes bloody forever. You couldn't do that with Bitcoin. No chance. No chance. I feel the need for speed. Okay. Crackhead would have done this. Did you see how quick? Do you see how quick I close, though? I don't sit around and wait for it. I don't hope nothing. There is no hope in trading. And if hope is in your trading, you're done. You know? No stop loss in the eyes of Jason Casper. What stop loss? There is no stop. You can put a stop loss on NASDAQ if you are playing a long range. I'm not playing a big range on NASDAQ. No. I'm not interested in playing big, massive moves. Now, later on, I'm going to take a trade on NASDAQ, okay? I'm going to take a trade on NASDAQ later on, okay? Look, it's come back up again, okay? But this is what I mean about stops. Why am I going to have a stop loss on NASDAQ? I'm just going to get out because you get the feel when it's moving. There's a lot of intuition when it comes to trading. A lot of it, because you have to get a feel for how it moves, okay? But it's too choppy now. Now it's not, it's very choppy now. It's very choppy, but there's something The problem I've got is they've come back down to this vector candle zone and rejected it away from it. Okay, so that kind of puts it in a bit of a sticky situation. I would like to see them flip out of the range to the upside. And this is where you have to hold on to a trade. See, now, wait. Don't do it yet. Don't do it yet. Come down. Where are we in terms of the high of the day? Okay, we're nowhere near it. See, I haven't got my depth. I don't know where I'm actually at. Hold on. Wait a second. So in this situation here, because they've come back up and recovered the vector candle, effectively, this is where we're above the Asian session range right here. Okay. So this is where I say to myself, okay, can I take advantage of another move up? But I've got vector candles down here that I've got to be very careful of. All right. And I am time sensitive right now. I do want to take the trade. But if they bring it all the way back down again, okay, then this high's already been done. It's established for me. Okay. But what I'd be looking for right now, because I'm only looking for a very small move, the idea is that you think that you're going to try and trade to the upside on that principle. Okay. But news is coming out in 20 minutes time. So there's going to be a lot of this chop. I could trade a short to the downside to see them come back into the vector recovery. But look at what's going on. They're choppy. Look, pin down, up, pin down, up. They're not really, look, that to me is a dead environment. Okay. So what I need to see is I need to see candles showing conviction of a move lower. Okay. And look, I can even, for me, it doesn't matter if I lose money on the trade. I'm not here to choose to make sure that every trade is a win. When you're a scalper, this is what you experience. Okay. So I've got to wait and see. Look, they've just gone for that liquidity. I'm going to try and go for it again to see if they can actually mark lower. But here we go. Sell, 6 ticks. Can we see them move down? Can they go into it? Are they done with it? No, they're not done with it. So I'm looking at this range right now thinking, okay, could they come back up again? Have they been showing that style of movement? And I'm like, okay, wait, am I going to see them go into it? No, they're spiked up to come back down again. They could go into the vector candle recovery point. I've got to be careful here. Here we go. Is he going to shoot down, get back into the green vector zone, establish the imbalances that's happened in the brinks? Here we go. We're going down into it. It's not really going down. It's spiking lower. And I'm like, it's not doing it yet. It's not giving me a real reason to get out just yet, but it's not really giving me a reason to stay, to stay. I'm caught now. I'm waiting for the vector recovery to come into play right now. But look at where my entry is right here. It's not really going badly against me. I'm not thinking of money lost here. I'm thinking about what's going on. Is it going to break down in a second and give me that vector recovery to the downside where the imbalance is? All right, so we're going into profit right now. It's going to sweep lower right now. 3, 2, 1. There she is. Keep going. 34 ticks. Okay. And even though, look, they've gone into it and shifted back up again, that's what I can't put a stop loss on. I can't put a stop loss on that because I get stopped out. It's not realistic. Look, that and it goes, shoots back up again. Forget that. That's not for me to I don't like trading that. I have to have a vector candle coming into play when I see that. And that's what I did just literally a few seconds ago. We saw the vector candle to try and see that move back up. So what we just made, we just pretty much, what we lost on it, we just come back up. 1,625 happy days. I'm cool with that. Does that make sense? Valentino, bear with me a second, bruv. All right? Bear with me a second. There is no algorithm for experience. And that's what Dan Pena said. I tell people to put stop losses, okay, because they haven't experienced the losses that I have, okay? So to save them losing money, put a stop loss. Look at the environment I'm trading. I'm a sniper. I have to be fast in, fast out. I've got no time to be thinking about stop losses. I would have lost on the move. Look at my range I'm trading. This is not about it. I get you saying, like, tell people to be careful and use proper risk management and don't use stop losses. Bruv, like, I get it. You teach what you preach kind of thing. But this is what I do. This is how I trade. I'm using one contract. I'm not using massive size. I'm trading a frantic asset, okay? They eventually went and cleared that vector. Happy days, okay? But I'm not in an environment where I trade. This is not my environment. I need to see manipulation. I need to see front running. And then once I've realized that, I can then exploit that afterwards. But always use a stop loss, ladies and gentlemen. If you've come to the game of trading and you've only been trading for 2 years, stick to a stop loss. But keep it as wide as you can, which means use as little as money as possible and keep it cheap. The tighter the stop loss, you're using too much money. Stop trying to get into this culture in trading where it's all about finessing your entry and finessing your stop loss, where it's like, I use minimal risk, bro. Like this sort of bullshit right here, where you've got an entry point, okay? Say, for example, you've got an entry point here for a short, yeah? And your stop loss is like this, okay? And then the person will share the image and price does this. It literally goes like that. And then it drops. And then they are the king of risk management. Go, look how much I risked, man, and look how much I made. That's bullshit. That's not realistic, man. Sorry, it's not. Unless you are getting it down to the tick, to the T. I'm talking T. That the point you enter is the point it moves. Then you can take all the clout you want. But that's not setting realistic expectations for a new trader. If you're a new trader, ladies and gentlemen, and you want to understand risk management, let me save it for you from a mathematical perspective, okay? Rather than focusing on 1%, 2%, or 3%, okay? Focus on survival and ask yourself, what are the chances of me blowing my account when I take this trade? And if you are edging close towards anywhere between 70s and up, you're using too much risk. Way too much risk. In other words, risk to ruin. I ain't blowing my account on a one lot trade. Do you understand how much NASDAQ would need to go for me to effectively blow out, what is it? Just to blow out this balance on one trade, on one contract on NASDAQ. I would have to, oh God, it would take a long time, okay? And I would have to just be letting it burn and burn and burn, okay? To really let me just show you what it looks like on one contract, okay? So let me just take a random trade right here. We're at the highs right now, and yeah, it's too choppy, but I want to show you in terms of the denominations to help you understand it, what I mean, why I don't put a stop loss, okay, when I'm trading NASDAQ, okay? So here we go. Let's just make an example here. We're going to go short. Look at the increments, 50, 10, it's like $10 increments. It's nothing for me, okay? How much money, how much would I need to lose, okay? Or how long would I need to keep the trade on for me to actually lose the whole balance? It doesn't make sense, okay? I'm using small amounts of lot sizes. It's perfect for me, okay? And 11 ticks against me is what? $70. Like if you're losing $70 on your trading account, and you've got $100, then that doesn't make sense why you're trading with $100, okay? So just be very careful when you are trading, and we're going to wait and see how this one behaves. Come on, go down. It's only $150. Go down. There she goes. Come on, make the jump. Where are you? There she is. Keep going. Spike lower. Go on. Where are you? Jesus. I'm looking at the wrong bloody thing. Come back down, take a little bit of a loss. They spike the 20. Come down. There she goes. Come down a bit more. Come down a bit more. Bit more. Bit more. Keep going. Down. Down. Go down. Fuck it, who cares? Never mind. But yeah. Don't fall for your own FTD. It's gone down again. I could sit here all day and do this. I really could. Hey, look, it's gone. I should have held, man. I should have held. I'm not doing that again. Anyways, ladies and gentlemen, mad love and respect. I hope you've enjoyed it. 15 minutes until the news announcements. That's why we probably got a little bit of a choppy chop in the range itself. But I hope that helps you understand. Wow. Look at that. Look at that. It's just taking a shoe bag to the downside. It's a 1 minute time frame. I'm normally trading this on the 30-second chart itself. Green vector candle recovery. Green vector, yeah. It's always going to do it. Roll over. Off you go. Let's try and do it. Come on, go into vector candle recovery. Come on, go into it. Come on. NASDAQ, you piece of shit. Come on. Do the vector recovery. Let me show my people. Come on. Come on. And And this is the thing about NASDAQ, right? It does this BS up-down story, and then it comes down, okay? And then you've got to put in a large sample size of trades to get around all of this madness. You have to. Otherwise, you're just not going to survive. And you have to have a decent account balance to be able to absorb the way NASDAQ moves. But I'm doing this to show you guys what I'm actually like when I'm trading. Like, I'm not trading a key time. It's 10 to 3. And it's just, look at it. That is horrible because they're waiting for news announcements and they're just stuck in ranges right now. They're not really doing anything. This fast move up and then fast move down itself, it then makes you think, hold on a second, how do you trade that? And you just don't, you just sit and wait. Like, look, where's the direction really? Where is it? You could say it's going up, but for it to go up and then it comes back down again and spikes, and you've got an imbalance down here, you then think, hold on, what if I hold it for another 5-10 minutes? Maybe it could do it, or maybe I could change direction. Like, I'm burning cash right now, but I'm showing you exactly what the story is, It could come back down, wait, close. Could try and see it go for the break to the upside. Maybe we get a big pump. Try and see a pump up like that. And that's what I'm doing all the time, But keep going. And you see why I use NASDAQ on other platforms? Because look, TradingView is kind of laggy as well. TradingView is very laggy. Very laggy. Look how long it's taken to do that, So I've got some making up to do right now, showing you all of this. Now, look how terrible that is. Let's just see something for a second. Maybe we could try and hold on to it. Let's just see. We're at the highs. It could actually pump up. Probably could try and sweep up a little bit more. Look left, vector candle recovery. I've got basically 10 minutes for it to try and do that, okay? I've got basically 10 minutes to try and see NASDAQ, try and make a pump to the upside and try and take out that 20,000 zone again. But I've got a wick right here, which then can send it down to come back up. See, that in there tells me could go up a little bit more, but the news announcements could put that into perspective. So I could hold on to the trade a little bit, but let's see if they do decide to pump it up. Here we go. We've got a little bit of a pump, but then again, look at that. So bad. So bad, but never mind. Where are we with it? Let me go to the smaller time frames. Look, choppy, waiting for news. And this sometimes what happens here is it then tends to like spike, okay? Comes down, spikes up, takes out the high, and it chops around. And this is because news is coming out in the next 10. I could actually hold on to this for the news, which would be crazy of me, but which moves fast. NASDAQ moves way faster, moves way faster. Where am I? I'm in a $300 loss. Okay, we can deal with that. It's no problem. But we could see them as we get closer to the 3 o'clock mark, they could pump up and really pump up from that point in preparation from the news. But look, the news is coming into play. Looking at the order flow itself, we've just got weak contracts, nothing really happening. There's the depth of market right there I'm looking at. And I've just got to sit and wait and play the game, And I'm not looking at the balance. No way. I'm looking at how it's behaving. Okay. And if I just pay attention to it, this is a spiky range. The logic says that as we get to news announcements, there could be another initial pump for them to sweep the high. And then once the news comes out, they could then continue the narrative even higher. So it's, we've had the good news about the jobs data, which then solidifies the idea of cutting the interest rates. And then we then see them make the move to the upside. But, I'm just doing this for example right now. Do you see what I mean? But PMI is less than forecast. Tino versus NASDAQ. Oh, NASDAQ will always win. NASDAQ will always win. Give me that little pump, NASDAQ, and we can then make the move to the upside. And you see what I mean about when you're watching someone trading, this is an instance that is now. It's not going to be the same later on, okay? But it's the thought process behind it all. It's all about how are you managing your expectations for a certain trade to come out? I don't care if this is in a loss. It doesn't matter to me. It doesn't. Because I'm not trading what I should be trading in terms of the time and what I'm looking at, okay? Made a quick couple of $100 there, happy days. But I'm just showing you this so that you get a feel for when you take a trade, what is it that you're actually thinking? What are you actually got to go through? How do you handle it? And right now, I've got NASDAQ going nowhere. It's doing dead behavior. I don't know where we are in terms of the depth of market. I can't see on this, okay? I can't see it. But all I can see is I've got vector candles down below here. I've got news announcements coming out. What does the logic say? Okay, we could be in for a line for a pump because they pumped it up over here. Could they be continuing the front running? Maybe going to see a little bit of a move before the news announcements itself, 5-2. So that's what usually happens. And they just come below the 20,000 point, and then NASDAQ could then try and make the move to the upside. Liquidity could be coming in, but you can see, look, it's going up to only come back down again. So that tells me I'm not in a good trading range. I'm really not. So usually what I'd do is I'd sit there and be like waiting to see how it behaves on smaller time frames, and then say, all right, if I start seeing commitment coming in, I'm going to take the trade and then ride the momentum, which is what I saw at the start when we took the first few trades. Now we're starting to see some movement coming in. It's starting to pump up. This should turn into a green vector candle if they do really mean the business, because its volume is coming in a little bit more as it is over here. So usually we'd see the green vector appearing at this point. How long have we got? We've got another 15 seconds. It's unlikely, but they need to push it out. Green vector. Come on. Yep. Come on. Come on. There you go. Green vector candle. Now should push NASDAQ even higher. Keep making the pump. Go for it. Got to be careful because the next candle could come back down again, but that's a new 5-minute candle coming into play. They could bring it back down if they are finished with this, or they can continue. Then they're going to push away aggressively from it. Keep going. 25 ticks. Keep going. Keep going. I do believe they're going to pump up a little bit more, but news isn't come out yet, so I've got to be very careful. Close strong up there. Daily open up there, so that could be something they could actually aim towards. Keep going up for it. Keep going. Push. Push again. The offers are there. The offers technically are there, but they could come back down and recover that green vector candle. So I've got to be very careful with it. I've got to be very careful with it. They could snap back down again. Yep, there you go. That's the problem I've got. And this is when you're waiting for news announcements. Yeah? Does that make sense? You see the thought process of what was going on there. I could have taken a nice little profit from that, like $200, but look, they're going to try and come back up again. So I've got to have that relay in my mind about the thought process behind when I'm in a trade. I should take a profit, take a little bit of profit, but I believe they're going to try and spike up and go at a specific range. So then that leads me to hold on to it because they've tried to recover the green vector. This should then lead to momentum to go even higher in the move, okay? But news is coming out, so what I'm going to do is wait for it to try and do it again, push up, try and break up. Tells me that the guys are still there, market's memory. Keep going. Keep going. Are they there? Offering out. Make the push. Keep going, keep going, keep going. Ride up. Big push. There's the push. Keep going. There she is. Keep going. There she is. Keep going. Keep going. Green vector. Get ready to close on the green vector. Push. One more push. Go to the green vector. Finish. Finish at the high, man. Finish at the high. Finish at the high. I'll take that 100 ticks. Don't want to waste time. So yeah, that's how we do it. Does that make sense? Does that make sense? How do you choose which candles to mark in the daily? I look, daily open, there it was. I should have held on to it, but it's shoulda, woulda, coulda. All right. So when you're in that frame of mind, it's you've got to, and that's why the hybrid system gives you these tells. That push right there, and they came down to it, told me that the guys were still there. They were there, right? So I've got to hold on. Where's the next point of interest where I know there's going to be more guys? Daily open. Look left. What we're recovering. We're recovering a vector candle all the way up there. So had I marked up everything, okay, and I didn't even know that there was a vector candle there. I knew there was a vector candle here, but I didn't know there was a vector candle until we alerted ourselves of it. But the logic of me moving with price right here was telling me that that's what they were going in for. And then the daily open's now coming into play, and the news is coming out in the next 3 minutes, and happy days, you know? Whatever you say, Tino. Why are people looking at it in terms of $20,000 position? Oh, in terms of leverage and all that. Yeah, I get what you're saying. Tiny sounds like he's helping giving birth to the NASDAQ. All right, watch this, right? News is coming out in 3 minutes, okay? I'm going to do this because I want to get an update over to the guys, and I'm waiting for something to happen first before I get my update out to them, okay? But this is a no-go zone for me. No way would I be ever trading the news announcements on the depth of market because it gets very, very messy. So here's me just waiting. What have they done? They've marked price up, and I've got vector candle imbalances coming into play. Okay. I know in the higher time frame that there is a vector candle that NASDAQ could effectively try and gun for. Okay. Now, what you will notice, right, if I show you on here, just watch how this moves. Okay. Watch how it moves. Hold on. Okay. Just watch how this moves and tell me how you can make sense of it. Focus on the bid and the ask if you can. There's a red and a green. That's the bid and the ask. And in the middle is the spread of it. Okay. That yellow is effectively your price, the entry that someone's going to be filled at. Okay. Just watch what happens when the news is due to come out. All right. Now, of course, I'm streaming right now, so there could be a little bit of a delay. But this is why it's important that you don't have positions open during news announcements. I'm going to show you exactly what it is. Two minutes. Just watch this. Can you see already? Right. Do you see what just happened there? Do you see how there was no red bars and then an order came in and then it was removed? I'm seeing spoofs coming in. So people are placing fake orders to entice the market. You got an order 17 down here, 15 down here, and they canceled 20. Look, they just took a load of bids off. Okay. So this is the preparation for news announcements. What you will then see is the bid and the ask. Look at the bid and the ask. You see how there's like a little bit of a spread because we're going into news right now. All right. And that's not a good time to be trading. All right. So this, when I say don't trade news, this is why. Because I'm looking at all of this thinking, oh, I could, go balls deep, Dino, and trade the news. No way. I'm asking for trouble like that. I am asking for trouble. Sometimes you can get away with doing it where you're like, okay, looks like it's good news, bang. And you see a big push, you take the candle trade, and then it then goes in your favor. Happy days, but it's not a sustainable way. As from a depth of market trader perspective, like a scalper, it's not sustainable. Here we go. Nice little push there. News is out. Okay. Look at that. You see that? Look at the book. It's gone so light right now. Now it's pumping up. If I were to take a trade on that lodge, I can't even find the entry. Look at the spread. You see that? You see the yellow line, how it was all the way up here and then it came back down. What the hell is that? I can't trade that. Look at the yellow price. Look at the yellow. How do you trade that? You don't. Wait for the news to come out and wait for the depth to actually start finding its feet. What does the news say on this? What was the data? Please tell me the economy is contracted. Holy shock. That's bad news. That's bad news. If the economy is actually doing great, they have no reason to cut the interest rates. So that could be bad news for us. You know? Does that make sense? 54 is not good, ladies and gentlemen. It's good for the dollar and it's terrible. Terrible for the market participants. But what they're going to do is they're going to front run it. They're going to keep running price and then we will pay the price later on. Okay? That is absolutely crazy. You see how it just changes? You could go in the idea that it's going to go up, all right, and absorb all this treacherous price action, okay? But how do you make sense of it? You can't. You know, you can't make sense of that move. I mean, they could keep on pumping up and we could hold on to a trade and go for it, but it's a very choppy scenario for me. And I've got offers coming into play, which is saying to me to take the trade, but this is where you then end up having the battle in your mind. See that little pause there? What the hell was that? That's the price I was getting filled at, and then the bids go all the way up. Oh, God, it's a horrible feel. So you wait for the market to finalize, let the order flow itself, get to grips with what it's doing, and then take your trading, okay? Raw spread. Raw spread. Go for raw spread, Fichi. Raw spread. Missed it. Asian session sweep. Where's the high? Where's the high? We're at the high of the day. Okay, so what they're doing now is they're eating the profile of the book. This is consistent with snap reversal, so I've got to be careful here. 20,100 could be. What did I say to you, man? Snap reversals, man. For God's sake, man. This asset is an ass. My days. Look at that. Look how they just snapped it high of day. That's what they do, man. You got to know your asset. But they've recovered it. You're trying to go for it. Go for it. Quick scalp. Keep going, keep going, keep going. Tell me you're done. Tell me you're done. Tell me you're done with that range. Tell me you're done with it. Go on. Push lower. Push lower. Go, 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 go. That's it. Push. Keep going. 34, 28 ticks, 27 ticks. Done. Happy days. Awesome. That was a nice trade. That's what I'm looking at. That's what I'm looking at. That's the look at the environment that I was in just then. High of the day. Okay. Broke the daily open. Consistent with snap reversals. Bang, they pulled it back, recovered the violet vector candle, took advantage of that little move, and it could go down even more. Okay? But they're moving. And that's when I say speed of the candles. Okay? Any questions, ladies and gentlemen? I'm purposely waiting because I've got to get, I'm waiting for something to brew. My platinum members, they're waiting for something, but I'm purposely waiting. I'm waiting for something to develop. I'm waiting for something to happen. That's not 1 second candle trading. That was a 30-second candle trade. And you know what? People always frown upon scalpers, all right? People frown on scalpers and they say, no, don't trade it. It's all noise. Please, bruv. Please. It's always in the detail. The people that say scalping isn't for... yeah. People is for scalpers. Like, if scalpers are people that don't understand the bigger picture, well, that's not the truth, you know? And look, they just get frowned upon all the time. I'm not going to get into it. Anyways. Other than that, ladies and gentlemen, be sure to like and subscribe. I'll be checking in with you later on. Remember, the Ethereum giveaway by BTCC is in the description of the live and in the Discord. All right. That just threw me off. That has. Mad love and respect, gang. I hope you learned something.